Hello and welcome to Chapter 10 Notes. Let me move the cord out of the way there. Sorry about that. So in Chapter 10, we're going to be talking about budgets. Now, budgets is something I'm sure that you are familiar with, both in terms of your own personal budget, which I hope you keep one, and at work. I mean, I'm sure that you have dealt with budgets at work, and if you haven't yet, you will. Okay, so this is a very useful chapter. And we attack the budget process in this chapter more from a manufacturing company standpoint. And we do that because if you can do a budget for a manufacturing firm, it just becomes even easier for a service or a merchandising firm. So we do the hardest one first, because that really goes through and explains everything in a lot of more detail. And then we do have an extra problem towards the end where we apply it in a merchandising company. Okay? So when you talk about a budget, it's a planning document. It's a financial plan. That's exactly what it is. And so some of the ways that a budget can be useful is for a planning tool. Budgets force managers to identify their goals and specify how they're going to be achieved and how we're going to deploy resources to implement company strategy. Okay? It's a control tool. So this is something that I saw quite a bit of when I worked in the real world. Is that if managers did not hit their budgeted profit numbers, they didn't get their bonuses. And maybe if they didn't hit their budgeted profit numbers over a longer period of time, we found a new manager. So they did serve as a benchmark for evaluating performance quite a bit. Okay, and so if we talk about some other, it can be a motivational tool. It's a carrot. You say you hit this budgeted performance or budgeted profit number, you get your bonus. And it's a motivation tool. And of course, it's also a communication tool. It can help companies to identify their resources and say, this is how we're going to deploy our resources to hit our strategic goals. And so in that way, it can help to communicate objectives and goals. In terms of developing the budget, you can develop budgets for departments, for divisions, for the entire company. You could have a budget committee, which could be composed of some upper-level executives. Okay. At a high level, there's two different ways to develop the budget. You could do a top-down budget, which is more what I'm familiar with. Is when you have imposed budgets. So, corporate. When I used to work in military systems as a financial analyst, I dealt with budgets quite a bit in my professional experience. Corporate would say to military systems, you have to make this much in revenue and you have to make this much in profit. Okay, lots of times those goals were pretty stretch goals. They're pretty high goals, and with our existing business, we probably were not going to hit those goals. And so, what we would often do is put in a plug into our budget for unsold new business. Somewhere we're going to get some new contract that would come up and help us to meet our budgeted profit numbers, and we would often put that in our third quarter because our fiscal year was on the calendar fiscal year, but we dealt with the government's fiscal year in September 30th. So we would put that in September thinking that, the use it or lose it policy for the government would kick in, and it would be a boon for government contractors in our third quarter, and then miraculously we would make our budgeted profit numbers. Fortunately, it didn't really work out that way quite a bit. We would hold out to a third quarter, then confess to corporate that we weren't going to make our numbers, and then heads would roll. That's at least the perspective that I had when I was a worker bee financial analyst. Okay. Anyways, top-down budgets imposed from corporate saying you have to make this much money. Bottom up would be a more participative budget. If I'm the CEO and everybody's in the class where my department heads, I'd go around and ask, well, how much money do you think you can make? And how much money do you think you can make? And you give me your budget. Now, the problem with that process is that if I also hold you accountable for hitting my budget profit number, you're going to give me a lowball number. So there can be a lot of budget slack problems when you get into the bottom-up budget process. Okay, and that's probably why I did not see that in my professional experience. I saw the top-down. You can prepare budgets for various time horizons. You can do them a 3 to 5 year time horizons. You can do short run. Okay. Most common that I dealt with was yearly. We talk about the master budget. Okay, this is what we're going to be doing, also called a comprehensive budget or profit plan. This is what we'll be going over in this chapter quite a bit, is the master budget, and the master budget is going to be composed of all these different sub-budgets. And again, especially when you get into the production and the direct materials, those are specific to manufacturing. You know, a merchandising company would have a purchases budget. A service company would not have, you know, production or direct materials budget because they don't make anything. They would have a labor budget. That would be their main expense, right? So you look over here at the relationships of these budgets that are all within the master budget. There is an order to doing these budgets. And if you think about it, if you're going to have a lemonade stand, and I often think about that because my daughter had a lemonade stand a couple summers ago, and we had to figure out, well, how much lemonade mix should we buy? Well, the first thing we had to do is figure out, well, how much lemonade mix do we think we're going to sell? And then we can go through and say, well, how many cups of lemonade do we think we're going to make? And then from there you can figure out, well, how much mix do you need to buy? So what I'm trying to get at is everything depends upon that sales budget. You have to do the sales budget first. And then all the other budgets flow from that sales budget. Okay? That's going to be the first one that you do. The production budget, which we'll talk about, shows us how many units we're going to make. How many units are we going to make? Now, obviously, we have to make enough to satisfy the sales, but we may want to have some excess ending inventory just in case our sales are more than we thought and we don't have back orders or stock outs. Okay? The direct materials and direct labor flows from the production budget. Okay? So how much we produce dictates how much materials we have to buy, how many people we need to employ, and maybe how many lemonade stands we need to have. Okay? And if I'm going to skip over some of this, I'm just going to kind of go over this diagram on page 5, because this diagram is a really good example of explaining all the relationships among the budgets. So again, what I was saying earlier is the first budget that you have to do is the sales budget. Now, why does the selling and admin expense budget depend upon the sales budget? Well, because in here is commissions, and we're going to pay commissions based upon our sales. So we need to know our sales first before we decide how much we pay in commissions. Once we know how much we're going to sell, that's going to dictate how much we produce. Okay? And then we might want to, we need to produce enough to satisfy our sales, that's for sure, but we might want to have some ending inventory there just in case our sales are more than we thought and we don't have to turn people away. Once we know how much we're going to produce, then that dictates, well, how much are we going to buy of direct materials? How many people are we going to employ? And then what's our overhead like? Okay? And then we can go from there. We can say, well, how much cash do we have to pay out for our direct materials? We may have some situations where our creditors extend credit to us. Okay? So we can buy some of our materials on credit, which would be accounts payable. Okay? Our direct labor, how much do we have to pay for our labor, and how much do we have to pay for our manufacturing overhead? Cash, we need to do the cash budget before we do the budget balance sheet, because cash shows up as a current asset on the balance sheet. And we need to do our sales before we do our income statement, because sales shows up on the income statement. And of course, we also need to do our selling and admin budget before we do our income statement, because commissions and other selling and admin expenses are line items on the income statement. And then why do we need to do our income statement before we do our budget balance sheet? That's because our remember what we have is our retained earnings comes into, or pardon me, our net income comes into retained earnings on the budgeted balance sheet. Okay? And we will go through that in a subsequent lecture video for chapter 10. Okay? So continuing on with our example right over here, this is our Royal Company. We're going to look at our master budget example. What we say is we have our Royal Company is making budgets for the second quarter. Okay? That ends June 30th. Here's our sales, and to make things easier, we only have one product. Okay? And we sell each product for $10. So what we're going to do is with this information, we're going to go through it and we're going to do each one of these budgets. Okay? And this will be a series of lecture videos in chapter 10 covering how to do each one of these budgets Because remember, each one of these budgets comprises the master budget. Okay? So the first thing that we're going to do is we're going to do the sales budget. Okay? And that would be the first budget that we would do. So we look over here and we say, we sell this is how many units we're going to sell, and we sell each one for $10 a unit. So the sales budget, we're going to go through and calculate out sales dollars just by multiplying, and we're going to do it for the second quarter. Okay, that means April, May, and June. That's the second quarter, and then of course for the quarter. So I come over here and I say April, we're going to sell 20,000 units, $10 a unit. Okay, times the 10. May, we're going to do the 50,000. And I got that from the prior page. And then June is 30,000 times the 10. And then we come over here and we have our 100,000 units times the 10. And then this would give us our sales dollars. And then we'll have our 200,000, our 500,000, then we have our 300,000. We add them all up and we get the $1 million right over there, which would be our total sales. Okay? Now what we can do is look at our schedule of cash collections. That would be the next thing that we want to do, also known as our cash receipts schedule. Okay? So, what we're going to go through here is figure out how much cash we're going to collect each month and then in the quarter in total if we assume this. Now, I'm going to go ahead and end this lecture video now because I won't have enough time in this lecture video. I have a cap of 15 minutes to cover all this. So I'm going to do this in the next lecture video, and so I'll see you then. Thanks.